Well, guys, there are some massive names that you have been asking me about that have just cratered down in stock price in a very short period of time, despite everything else seemingly going to the moon. And I know you guys want to know, are these stocks at 52-week lows a massive opportunity or a huge trap? So that's exactly what we'll talk about. We'll talk about, are these a massive opportunity or not? And these are not some of the normal stocks. These are some high-flying names, some big companies, some hot names recently, very, very recently, that have just completely cratered down. And so I understand exactly why you guys want to ask that, and we're going to talk about it today. Just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today, guys. That's what we're going to talk about. Sorry, not everybody's going to agree with my take. That's okay. Let's just have a frank discussion about these stocks. Now, keep in mind, we are talking about stocks that are at 52-week lows. Now, I don't care about 52-week lows. It really tells me nothing. It might very well give you a little bit of an inkling like, hey, maybe I should look into that stock a little further. Maybe it's on a discount. Let me see what's going on there. But a stock can be at 52-week lows and it's still overvalued from a valuation perspective. You got to keep that in mind. 52-week lows, that's why I don't really care about them all that much. Like I said, it may very well tip you off to, hey, maybe I should look into that stock. Beyond that, it doesn't tell me anything because it might very well be significantly overvalued despite the fact it's at a 52-week low. That's the first piece. The second piece is, if it is indeed at a 52-week low, is there a reason behind it? And that reason might very well be it's a bad business. It's a declining business. Business is going down, not up. And therefore, you're probably in for more 52-week lows into the future because it's a dying business or a declining business, not a business that could very well be an opportunity and it's just Wall Street being stupid. So that's why it doesn't really mean a whole heck of a lot to me. Same exact thing with 52-week highs. I'm happy to buy a stock at a 52-week high because it might very well still be undervalued from that valuation perspective there. That's why that's so important. That's why it's so key. 52-week high and 52-week low tells me nothing in regards to is a stock a buy or not. However, valuation absolutely does. That's why I harp on it so much here in this channel. So I understand we're using 52-week lows here to discuss these stocks, but anything beyond just simply using it as a, okay, well, let me look into that, doesn't really mean a whole heck of a lot beyond that. So let's jump into the first stock here, and that stock would be Chipotle. Now, you guys know this stock was the darling coming, right around out of lockdowns and everything else of that nature. It just, kept going higher, kept going higher. The CEO was actually going on earnings calls and bragging about the fact that, hey, we can just keep raising prices and our customers don't care. As ugly as that is, at first they were raising the prices to cover the inflationary costs and obviously all the shipping mess and everything else that kind of went on during that time frame. But then they were one of the first. Lots of other CEOs followed, but they were one of the first to brag about the fact that, hey, we can just keep raising prices and it just doesn't matter. Our customers keep coming in. We got lines out the door. We can't keep stuff in stock. Like, they were one of the first ones to start doing that. Now, obviously, that CEO has since left. He's over at Starbucks now trying to turn Starbucks around. But you were seeing Chipotle struggle because that's what happened when you just raise prices. Well, the current management team has to continue to try to spit out more and more profits, more and more revenue. And unfortunately, when you kind of reach that point where you can't really raise prices anymore, and obviously people aren't getting tons of free money from the government and everything else of that nature, all of a sudden you've got to start cutting on quality. And then when you start cutting on quality, of course, what happens? Yes, you give it a short-term boost, but it doesn't really help out the business long-term. And so you end up in the cycle that Chipotle is in right now, and it's up to management to get them out of that cycle. And as of right now, I don't know if they have the right plan in place in order to do that or not. I know for me personally, I used to eat at Chipotle a lot. I don't hardly anymore because the quality is just gone downhill. Not only the quality in terms of the food, also the quality of some of the folks that work there as well, where of course I'm sure they're cutting wages in order to try to boost that bottom line. So all the way around for me, my experience at Chipotle now is not the same as it was just a couple of years ago. And so for me, when I look at this stock, I look at the financials, I look at what's going on there, it is a turnaround play now, and it's going to be hard to do, and especially in this type of environment that we're in right now. So for me, this is definitely one I have no interest in buying the stock right now. Might very well get at some point in time in the future to a valuation where I'd be interested, but I tend to not really buy food industry type stocks anyways. It's not necessarily outside of my circle of competence. I just think there's better opportunities out there. And of course, I like the margins with tech and a lot of other things of that nature more so than I do, people that, Chipotle's only making money if they're serving physical products to folks. And so for me, that right there is another one of those things where I feel like I can get better alpha other places. So stock number 2 is Figma. Now, the moment this IPO was announced, all the way up until it IPO'd and it went to the moon the first day of the IPO and everything else of that nature, I was getting asked consistently, are you going to buy Figma? Are you going to buy Figma? Are you going to buy Figma? Guys, as a rule of thumb, I never buy IPOs. I can't think of an exception. There's probably one out there, so I'm not saying it's never happened. But I think through every single IPO I've experienced over 25 years, and a lot of them have popped off as soon as they went off, but not a single one of them, it went to the moon and never came back down, and I could never buy the stock again. Not one that I can think of. As a matter of fact, most of them you could pick it up cheaper than the IPO price sometime within, the first 2 years after it IPO'd, regardless of whether it's the company's fault, something else happened. Doesn't matter. That just seems to be the way that it goes. More importantly, you're guessing on a company at an IPO. And if you don't understand the IPO process, you don't understand that price is already manipulated and everything else anyways. Because remember, Wall Street takes a company public, right? They go on roadshows. They do everything they can to pump up the stock price ahead of time, where it has nothing to do with valuation, it has nothing to do with the financials. It's just a question of, can they put the IPO out there at a specific price? And of course, the bigger price that they can put it out there at, the more they make on their bonus and the more money they take to the bottom line for them. Not for you as an investor, not for the company. Obviously, the people that own stock in the company prior to it going IPO, obviously they're going to make a ton of money. But that's why people trust Wall Street to take it, because they know they're going to get a higher valuation than anybody else in terms of the sale. And then where the stock goes after that, well, you got a lot of folks that cash out in the meantime, right? And of course, those Wall Street folks, they went, yeah, thank you. I sold it right here. Doesn't matter if it craters down 80%. Doesn't matter. I got the IPO here, and they're going to take their fee based upon that. When you understand that's the dynamic of the game, and you understand they go on these road shows and they're trying to sell it to everybody out there and every fund out there and pension funds and insurance funds and everything else, trying to get them all to buy this IPO, you start to realize it's an artificially inflated price. More importantly, I want the company to prove it. Being a private company is very different than being a public company. The accounting's different. The rules are different. A lot of things are different. And you don't know, can this management team execute as a public company versus a private company? And a lot of other things of that nature you have to account for, and it's impossible to do at IPO day. That's why I stay completely away from, hey, give them a few quarters. Let them figure out some things. Let some earnings roll in here. Let the management team field some hard questions in a public forum where they can go to jail for giving false information and things of that nature. Very, very different than a private company where you can pretty much say and do whatever the heck you want, and there aren't a lot of repercussions for those types of actions. So for me, I didn't want anything to do with Figma then. You still look at it right now from a valuation perspective. I don't think it's still remotely close to fair value. That's how pumped up it was. I actually like the company. I think the product is interesting. Unfortunately, according to management's numbers, they're already seeing the growth rate slow. Still growing, but the growth rate is already slowing according to what they're saying on earnings. So when you look at some things of that nature, I kind of go, okay, wait a second. I'm going to overpay for a slowing business that just now IPO'd. That's not really a spot that I want to be in. So although I think it's a very interesting company, at this stage, I have no interest in buying the stock at these levels. Again, might very well be opportunity there. It might be one of those high beta names that just always trades at a ridiculous valuation. But in the past, and that's been my investing history, I always get an opportunity to buy great companies at undervalued prices based upon valuation every single time. It's never not happened for a stock I wanted to own. I just have to be patient in the meantime. And I want to give management some time to get a few quarters underneath their belt, get the market out there, get a few quarters underneath their belt, evaluating the company, see what's being said, see exactly what they're doing, seeing how they're going to navigate some of the challenges that we have coming over the next few years. And then maybe at that stage, if we get the right pricing, might very well be interested in it. But for now, if we're talking about valuation, it's definitely overpriced even at today's 52-week low. Number 3 is C3 AI. Again, this was another one I got asked about all the time. Am I buying it when everything that had AI in it was popping off? I didn't really have any interest in it. Didn't like the product. Didn't think there was anything differentiating it. Definitely didn't like the valuation at all. Still really don't, if we're wanting to be perfectly honest here. And I don't know. I think there's going to be other players in the space, and I think what they do is easily replicable. Now, having said that, AI is such a dynamic space, and everything kind of involved with that is changing and evolving so rapidly. At least they're in a space to where, man, they're one breakthrough away or one product away from completely flipping that script and having something completely different happen with the company there. So that can happen. I have not deep dove enough into the stock to be able to identify, are they working on something other than I assume that they are, but I don't know for sure. So that's all part of your due diligence there in regards to looking at stocks, is seeing, hey, is there something there that can really turn this thing around? And I remember people arguing, hey, is it C3AI or is it Palantir? Well, I'm glad I chose Palantir, and I chose Palantir based upon the financials, the valuation, and everything else involved in what they do. I just felt it was far superior, and I liked the company and I liked the valuation of the stock. More importantly, the financials, the growth, everything else for me just made sense with Palantir. I didn't really see it as much with C3 AI at the time. That's why I went with Palantir. And of course, that turned out to be the right call. But now that C3 AI is obviously cooled way off, you've got to do that due diligence to know if there's an opportunity there or not. And on to the last stock right here, and that would be Lululemon. Lululemon, I don't even remember what it's supposed to be called. You guys corrected me down in the comments. Last time we had a video up on it, I think I said it right for one video, but now I'm back to probably saying it wrong again. I can't remember which one it is, but either way, Lulu, we'll just say that, to make it a little easier on myself there. It's definitely a company that is in flux. It's in transition, and they're trying to figure out what they want to do next. What is their brand? What are they doing? Obviously, the numbers were not good, and I don't know where that future growth is going to come from. Now, just doing a little bit of background research for this particular video right here, obviously they are picking up in the rest of the world, but it seems like in America, they're declining. And unfortunately, especially in retail, you have to win the American market because we spend money like nobody else. Not only do we have the most money to spend, we spend it like nobody else. Nobody else spends 100 and something% of their income. We do. Rinse and repeat there. So if you're losing the American market, you might very well be gaining other places, but is it enough to offset what they're losing here in America? And more importantly, even if it's just a net, that means you're not growing. And unfortunately, it's priced, and it definitely was priced for a lot of future growth that I don't know if it's coming or not. To me, what's the next thing for Lululemon? What happens if yoga pants go out of style? And I understand they are involved in a lot of different, business lines or, clothing lines within the clothing there. But if it's all of a sudden not the hot thing anymore, where are people going to next? And more importantly, how are they going to get people back in the doors? And that's just one of the weird things with fashion. That's why I don't really get involved in clothing companies all that often, because can't keep up with that sort of stuff, right? I mean, look at me, really? I have no idea. I have nobody there directing me. I just kind of grab what I like and the style and make sure it fits right, and I move on. In terms of what the next top brand is, or what 25 to 45-year-old women want to buy, or whatever the case is, I personally have no freaking clue what that would be, what the new trends are coming, and all that sort of stuff. Every time I am out at the airport, at a mall, or whatever the case is, I'm kind of like, I have no idea what the heck people are wearing. I have no idea what's going on in style right here. I'm just kind of like, oh, wow, I remember seeing that in the 80s or the 90s, some stuff like that. So apparently a lot of other stuff's come back. But keeping up with those trends and understanding who's on top of them, I have no freaking clue. So for me, this is definitely a stock that I don't have the expertise to be able to spot what's coming next. And more importantly, when I just look at it from a business perspective, I don't see where that future growth comes from. And unfortunately, right now, it's priced for a reasonable amount of future growth that I don't know if you're going to get it or not. So this one may very well have more to fall. Obviously, they're probably one hit product away from kickstarting that growth again. I just don't know where it is, and I can't accurately judge that. So for me, it's a stock I got to stay far away from. And if you want to learn how to create your own circle of competence there, so that way you understand exactly what you're buying, and you want free courses, free coaching, and everything else, check out the pinned comment down there. For those of you guys that made it this long, I may have left something special for you where we do all that. Lots of exclusive videos. We got live Q&As going on all the time. Of course, you can ask me questions directly in the Discord there. So much involved, guys. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.